What I'm presenting today is part of a book that I'm working on Malaysia and the globalization of Islamic finance. And basically it describes how planners and various types of experts are trying to make Malaysia, or Kuala Lumpur, the capital, the New York of the Muslim world, and build this Islamic Wall Street. And the idea is that it will be the central clearinghouse for all these economic and financial transactions that will take place according to Islamic prescriptions on economic action. So the chapter that I'm presenting today, which is a piece of this larger project, is a kind of, I think you'll find, a particularly anthropological take. And it emerges from something that I noticed while I was doing field work in Malaysia, which was I'd be talking to these Islamic bankers, you know, who are really buttoned down guys. They wear suits and ties and dress extremely well. And, you know, they're very together and they're always on their Blackberries or their cell phones. They're, you know, typing out messages. I mean, they're just like bankers here. But when I would go in and interview them and I'd talk to them, they would keep comparing Islamic banking to halal food and specifically to halal chicken. So I started thinking to myself, well, what's going on here? You know, like, why is there, they keep talking about chicken? So this paper today, in some sense, is an attempt to grapple with why my interpretation of why these guys were always talking about chicken whenever I wanted to talk to them about Islamic banking. So I get started. In November 2013, I sat in an audience while Amira Izara, the CEO of one of Malaysia's largest Islamic banks, addressed an audience at INSIF, Malaysia's Global University of Islamic Finance. She was delivering what the university called an industry talk, in which Islamic finance professionals offered their insights about the practice of Islamic finance to faculty and students. She focused mainly on extensive reforms that the Malaysian Central Bank had recently made to the country's Islamic banking system. She spoke carefully. Many of the faculty and students there were deeply critical of the practices of Islamic financial institutions, and she seemed particularly conscious of the presence of several senior professors in the room who were widely known proponents of reform. Her presentation focused on reforms to Malaysia's Islamic banking laws that had been passed earlier that year by the country's parliament. But toward the end of her remarks, she expressed frustration with what she saw as a contradiction in the piety of those she sought to attract to the bank. With no shortage of exasperation, she said, "Malaysian Muslims go out of their way to consume halal food. They're always checking the labels for a halal logo, but then they walk into a conventional bank and don't blink an eye." Frustrated by the general ignorance about the religious permissibility of certain economic practices, she related an experience following a previous presentation on Islamic finance that she had delivered. "A man came up to me afterwards with a shocked expression, and then he told me, 'I took a conventional loan to finance my son's studies at Al-Azhar.'" The audience chuckled knowingly as she described the man's horrified countenance upon realizing that he had convened Quranic injunctions against the collection or the payment of interest by funding his child's education at one of the world's most renowned centers of Islamic scholarship with an interest-based loan. Izara illuminated a contradiction that was the subject of frequent frustration among Islamic finance professionals. Their discontent stemmed from their perception that Malaysian Muslims were exceedingly fastidious regarding religious prescriptions on aspects of daily life, such as dietary consumption, but far less careful when it came to commercial matters, especially banking. Thus, they regularly referred to the fact that many of their brethren avoided alcohol and pork with steadfast determination and doggedly inspected the labels of packaged food for the halal logo that certified approval by Malaysia's Islamic Development Department. However, these professionals were flummoxed by the ignorance of these ostensibly pious Muslims when it came to religious prescriptions for economic action, especially the vehement Quranic injunction against interest. They felt that citizens showed markedly less concern for religious sincerity when it came to opening a bank account, shopping for a home loan, or applying for a credit card. Today, I seek to show how Islamic finance in Malaysia and beyond is riven by questions over the extent to which compliance with economic directives in Islam's key texts, the Quran and the Hadith, is necessary to proper religious comportment. As such, the comparison between consuming Islamic financial products and maintaining a halal diet offers a window into broader debates in which Muslims are enmeshed as they seek to reconcile Islam with various dimensions of modern life. Furthermore, I seek to show how this comparison precipitates another set of animated debates over the Islamicity of Islamic finance. That is to say, deliberations regarding the extent to which Islamic banking indeed fulfills the religious and moral principles found in Islam's central text. As Islamic finance has expanded rapidly in Malaysia and other Muslim-majority nations, this growth has been accompanied by broad reflection over the relation between Islam and Islamic finance. Ethnographically, these questions were evident in two distinct problematizations. On the one hand, were the questions that employees of Islamic financial institutions, such as Izara, raised about the sincerity of the piety professed by Malaysian Muslims who sought to keep halal diets but did not participate in halal banking. On the other hand, Islamic scholars and Islamic economists argued that Islamic finance was insufficiently Muslim. Sharia scholars invoked the failure of Islamic finance to fulfill the maqasid, or purposes, of the Sharia, whereas Islamic economists argued that Islamic finance failed to meet religious prescriptions for economic action evident in the Quran. Describing these debates, I conclude that the apparent paradox between, on the one hand, inattention to Islam and economic action, and on the other hand, hyperattention in dietary practice, is rooted in both the relative complexity entailed in creating halal financial products as opposed to halal food, and uncertainty about the Islamicity of Islamic finance stemming from criticisms by Islamic economists and Sharia scholars. Even as these debates have become more heated, I want to underscore the development of Islamic finance in Malaysia during the past 30 years that has been nothing short of phenomenal. Today, there is a thriving Islamic finance industry in the country, and it is highly visible in the streets and public spaces of large cities in the country. Bright advertisements offer consumers credit cards like the Bank Islam Charge Card that provides free insurance coverage, low fees, and no compounding finance charges. Within Kuala Lumpur's massive ultramodern train station and on the streets outside, eye-catching advertisements for Al-Rajhi, Al-Rajhi, a Saudi firm that bills itself as the world's largest Islamic bank, encouraged potential customers to get there fast with Al-Rajhi personal financing. On the other side of the station, the mainly Qatari-held Asian Finance Bank boldly proclaimed that it was moving the world to Islamic banking. Malaysian currency is readily available at the numerous ATMs owned by one of the over 20 Islamic banks operating in the country, and long lines often snake back from the terminals during peak shopping times. The Malaysian state, led by the country's central bank, has sought to incubate a comprehensive Islamic financial system consisting not only of a network of banking institutions, but also of an Islamic money market, Islamic capital markets, and an Islamic insurance or takaful system. Institutions across the country have readily sought to develop this market, and today Islamic banks aggressively promote Sharia-compliant credit cards, mortgages, insurance policies, and savings accounts. In addition, 2/3 of Islamic bonds, or sukuk, issued around the world are denominated in Malaysian ringgit. And the country has sought to spur growth and innovation by opening its borders to competition from Islamic financial institutions headquartered in the Persian Gulf region and elsewhere. So this is Kuwait Finance House, and then there's the aforementioned Al-Rajhi. These are both Gulf-based banks that have opened up Malaysian subsidiaries. The Malaysian state has aggressively sought to position the country as a global hub for Islamic finance, a gateway to the Islamic economy, and in the words of one participant in my fieldwork, the New York of the Muslim world. However, in these efforts to create a transnational Islamic financial system, a debate incurred about, again, in the words of one participant in my fieldwork, what the Islam is in Islamic finance. The ethnographic research that I conducted took place between 2010 and 2014 and is based on observation of and interviews with 4 principal categories of experts active in Malaysia. Banking regulators, who, well, I'll describe them in a moment. Banking regulators, Sharia scholars, practitioners, and Islamic economists. These are kind of the 4 main categories of experts who are working in this domain. These categories are native categories insofar as experts would invoke them in explaining Islamic financing KL and describing the people with whom they interacted. In other words, these are the categories through which these groups of experts referred to themselves and others. The regulators were primarily employed by either the Central Bank of Malaysia, be it equivalent to the Federal Reserve here, or the Islamic Financial Services Board, an international standard-setting body for Islamic finance that is based in Kuala Lumpur. Sharia scholars generally hold specialized training, this is the second group, specialized training in the discipline of Islamic jurisprudence, or fiqh, that I'm sure many of you will have heard about, and are hired by Islamic banks to sit on what are called Sharia advisory boards, committees that evaluate the religious permissibility of the products that an institution offers. These boards and the prominence of Sharia scholars perhaps most distinguishes Islamic finance from its conventional counterpart in its practical and institutional operations. It would be something like having a bunch of Christian clergy or priests sitting on a board of Wells Fargo or Citibank or something like that. So if you can imagine, like they literally have the power to say, no, you can't offer this kind of savings account, or you can't offer this kind of current account, whatever. The third group with which I engaged were Islamic finance professionals, such as Amira Izara, and included senior executives, but also those employed at lower levels in the hierarchies of Islamic financial institutions. Finally, I observed, interviewed, and sometimes participated in events with self-described Islamic economists, who typically hold advanced degrees in conventional economics from universities in Europe and North America, and have worked at institutions such as the Asian Development Bank, the IMF, or the World Bank. Islamic economists emphasize the compatibility of Islam and certain strands in the academic discipline of economics. They look to Islamic texts, more the Quran than the Hadiths, to find precedent for economic ideas in Islam, and are generally more comfortable deploying the theories and mathematical models of economists such as John Maynard Keynes, Milton Friedman, and Irving Fisher, rather than the hermeneutic interpretive methods deployed by Sharia scholars. Islamic finance also questions the presumption that economic action is necessarily secular. The anthropologist Halal Assad pointed out that modernity was premised on the designation of distinct spheres of life in which religion could be neatly cleaved from domains such as politics, society, or economics. This is kind of the secular rationality that is very influential in the West today. However, Islamic finance calls this separation into question as banks, as institutions such as banks, insurance companies, that have once been presumed to be secular are subjected to the intricate task of reconciling domains of knowledge and practice that were once represented and practiced as separate. So, in debates over the Islamicity of Islamic finance, experts often invoke the distinction between form and substance to make claims about the authenticity or inauthenticity of products and practices. As the anthropologist Bill Maher has described, one of the most contentious issues in contemporary Islamic finance is whether it is Islamic only in form or also in substance. Two dominant schools of Islamic jurisprudence, or fiqh, have come to different conclusions regarding the permissibility of some of the key instruments developed by Islamic banks. The Shafi'i tradition which is the predominant fiqh school in Southeast Asia, it's here in dark blue on the map, has typically emphasized form over content and avoided legal decisions that ascribe intent to actors, asserting that only Allah can discern individual intentions. In contrast, fuqaha from the Hanafi school, which is common in Southeast Asia and parts of the Middle East and North Africa, in bright green on the map, generally emphasize substance over form and hold that intentions can be deduced from actions. In practice, this has led to a situation in which certain financial instruments permitted by scholars in Southeast Asia have been explicitly prohibited by scholars in South Asia and the Middle East. These differences have also led to somewhat surprising interventions, such as cases in which bankers have weighed in on matters of religious scholarship. So you literally have these, head bankers kind of, quoting various passages from the Quran or certain hadiths to kind of make their point at public forums and conferences and stuff like that. For example, Badli Shah Abdul Ghani, the CEO of CIMB Islamic, has been particularly vocal, stating that while other fiqh traditions emphasize form over content, only the Hanafi school of law advocates for the substance over form outlook, putting emphasis on the intention of both parties. Now, why am I focusing on this split between form and content and whether you privilege one or the other? Well, there's a whole philosophical kind of trajectory, or going back to Plato, that deals with this issue. But in this particular example, one particularly controversial contract about which scholars have come to differing opinions is called a bay al-ina. So I'm going to show you what one of these contracts looks like and how it works. This contract, the bay al-ina, has really been the backbone of Malaysia's Islamic finance industry, although recent criticisms have called its ubiquity into question. Bay al-ina is a cost-plus contract in which a financial institution takes an asset that it owns, such as a computer, and then sells it to a customer at a markup on deferred payment terms. So the asset in blue there, the bank is A. What the bank will basically do is take a computer that it already owns and says, here, we'll sell this to you, for $1,000 payable over 12 months. And then 2 minutes later, they'll turn around and say, okay, now we'll buy the computer back to you for $900 on the spot. So they've effectively kind of reproduced an interest-bearing contract, but made it Sharia compliant by using this asset and having a kind of sale, even though one end is deferred payment. It's all kind of been ruled Sharia compliant. In Malaysia, the markup that the customer pays over the deferred payment schedule mirrors the prevailing interest rate set by CLIBOR, the Kuala Lumpur Interbank Offered Rate. This is a daily interest rate at which banks borrow funds from other banks and is similar to the federal funds rate in the United States. So they basically have kind of concocted this way to make a Sharia compliant contract where there's no interest officially, using this kind of system of a sale on the spot for cash and then buying back the asset in cash, but selling it on a deferred payment basis, right? So again, this has been very controversial. In Malaysia, this contract was permitted because scholars argued that only Allah knows human intentions. Thus, no judgment could be made regarding the substance of the contract or what the funds were being used for. The scholars would say, look, on paper, this is fine. Formally, this fits all Sharia requirements. This should be permissible. So they kind of permitted it. However, in the Middle East, Sharia scholars argued that bay al-ina was impermissible because although it fulfilled the formal requirements of a legitimate economic transaction, the objective of the contract was, in their words, to clearly replicate a loan. Thus, though on the surface it appeared Sharia compliant, a more critical view of its substance revealed that it was hiyal, a legal stratagem. It was a trick in order to make something look like it was Sharia compliant, but really what they're doing is just exactly what Citibank is doing and Wells Fargo and all these other banks. The question of halal served as a frequent subject of analogy in debates over whether Islamic finance met religious requirements in form or in substance. I was struck by how frequently Islamic finance experts would make analogies between consuming halal food and using Islamic banking products. As Johan Fischer has noted, today in Malaysia, the halal designation is being deployed in a multi-billion-dollar food industry in which halal labels are mobilized to instill and sustain Muslim subjectivities. As Fischer has shown, halal labeling, a practice whereby institutions granted authority by states to denote food and other commodities as legally permissible for consumption by Muslims, has become a potent means by which the Malaysian state has sought to confer a pious Islamic identity on so-called indigenous Malaysians, who are in fact defined as Muslims in the federal constitution. So if you identify as an indigenous Malaysian or a Malay, you are by definition Muslim. You can't be Christian, you can't be Hindu, you can't be Buddhist. The state has further sought to capitalize on halal labeling by making the country a global center for halal food certification. Halal food served as an important precedent in formalist arguments in support of Islamic finance. Nuraini, a former high-level Islamic banking executive, told me that her husband often used to criticize Islamic banking. He'd say, "Look, this Islamic banking is the same as a conventional one." She told me that she would respond to him by saying, "You may be eating the same kind of chicken, but one is halal and one is haram. You may think it is the same. The chickens look the same, except that one has been slaughtered using the phrases of Allah, and the other one has not. Thus, just as a halal chicken might look the same as a non-halal chicken, an Islamic financial instrument might look the same as a conventional one, but in fact a religious logic undergirded the Islamic version that was absent in the conventional version." So they would look at that contract I showed you a moment ago, that Bayalina, and say, "Look, well, you know, it kind of looks like it's a conventional, a loan contract, an interest-based loan, but in fact, you know, it's Islamic because it's Islamic in intent, right? That there's something you can't see inside it that makes it Islamic." Hamza, a CEO at one of Malaysia's largest Islamic banks, also invoked halal butchering when describing the formalist approach to Islamic finance. So this is another CEO I was talking to. He explained that the only difference between a halal chicken and a non-halal chicken was the manner in which it was butchered. He said, "The taste is the same. The chicken looks the same. The only difference is that a prayer was recited during the slaughter and the animal was killed in a particular way. But," he continued, "once the two chickens get to the supermarket, they're identical. If the taste is the same, why bother buying a halal chicken?" Hamza felt that this focus on form was not sufficient to differentiate Islamic finance from its conventional counterpart. He said, "Islamic finance needs to reach beyond form to the substance, Thus, Islamic finance had to go beyond the methods of the halal food industry that created permissible consumables through superficial techniques such as prayers and methods of butchering, but in the end, producing products that looked and tasted the same as their conventional counterparts. To do this, Hamza invoked the organic food movement as a model for the Islamic financial industry. He suggested the justification for Islamic finance should not be based on claims to religious authenticity, but rather on the fact that Islamic economic principles improved human life. Thus, rather than creating a halal chicken, Islamic finance, he said, should seek to create a free-range chicken, which he said tastes better, is better for you, and is better for the environment. He cautioned that a free-range chicken was more expensive than a factory-farmed chicken, but he argued that the higher quality meat consumed less frequently would have positive social effects overall. This guy is, I mean, he's brilliant. He has a law degree from Harvard and extremely smart, knows Sharia inside out. but I'm sitting in his office and we're having this he's giving me this long explanation of halal chicken, free-range chicken. Literally, I have it on tape. It's like 45 minutes. It's really fun to listen to. The point of Islamic, so this is Hamza talking. The point of Islamic banking is, why eat chicken every day? It's expensive, so you have to eat caged chicken. Now I only eat chicken twice a week, but it's healthier, tastier chicken, so it's a choice, whether you want chicken every day or 2 or 3 times a week. Healthier chicken once in a while or unhealthier chicken every day. I think our parents chose the second option, but eating meat every day means that the quality of the meat can only come down. By eating less, we can give a chance for the farmers to achieve the same profitability but less volume, more space for the chicken, and better quality chicken. So less is more. By changing the point of comparison from halal chicken to free-range chicken, Hamza was making a key point. Free-range chicken, in his words, reached beyond form to substance because it was healthier and more environmentally sustainable, whereas halal chicken differed only superficially from factory farmed chicken. His point was that Islamic finance should be a true alternative to conventional finance, rather than simply offer a formal veneer under which lay conventional financial operations. However, he was also suggesting that this development would not come for free. A true alternative would require a price premium. Thus, one should expect to pay a bit more for an Islamic financial product, just as one expected to pay a bit more for sustainable food. How much more time should I take? 5 or 10? Okay, cool. I have some stuff on maqasid. Well, I'll just a little more ethnography here. Hamza drew out the analogy between Islamic banking and gastronomy further by denoting that there were several ways of applying Islamic knowledge to both finance and food. He critiqued the formalist fiqh orientation with one that he said focused on maqasid, which refers to the purposes of Islamic law. This is kind of a branch of Quranic sciences, Quranic studies. Fiqh only addressed the letter of the law, whether an action or an object was permissible or impermissible. In contrast, reasoning on the basis of maqasid addressed the spirit of Islamic law, whether an action or object fulfilled the moral and ethical imperatives inherent in Islam. He said the legalistic emphasis just looks at how the chicken is being slaughtered. If you take the chicken and you deep fry it in hydrogenated oil and it has a high calorie content, it is still halal from a fiqh perspective. In contrast, he argued that Islamic finance should embrace a more encompassing perspective that implemented the moral vision of Islam. From a higher objective, he said, from a maqasid perspective, deep-fried chicken is very unhealthy for you. So what is the role of Sharia scholars? Should they just look at an object or should they look at the process? What about the front end? Are you looking at the slaughter only, or are you looking at the fact that the chicken never touched the earth? From the time it was incubated to the time of the slaughter, it just stayed in a cage. Did that violate the rights of the chicken? The problem is that fiqh only looks at whether it is slaughtered properly. The argument that Islamic finance is Islamic only in form but not in substance is most evident in the allusion that Hamza makes to maqasid, or the purposes of Sharia law. The maqasid defines the Sharia based on 5 foundational goals: the preservation of religion, of life, of progeny, of intellect, and of wealth. Drawing on a renewed interest in the maqasid in Islamic studies, especially within the Muslim world, experts who advocate that Islamic finance should meet the maqasid objectives see it not just as the creation of a financial system, but as a means of remaking society. The demand that Islamic finance should realize the maqasid was evident in a variety of public fora that I attended in Malaysia. One such forum consisted of papers delivered by Sharia scholars, a number of whom served on Sharia boards of Islamic banks. It was sponsored by the Securities Commission of Malaysia. So it's like the SEC here. You can imagine sponsoring a conference on fiqh, and actually Sharia law. It was hosted by the International Institute of Advanced Islamic Studies, a think tank based at the University of Malaya, and directed by the renowned scholar of Islamic law, Hashim Kamali. Yunus Sulhi, a senior scholar who served on the Sharia board of HSBC Amana, the Islamic arm of the global banking giant HSBC. I just saw one last night in downtown Fairfax. Not the Islamic version, the conventional version. That'll be the day when they bring the Islamic version to downtown Fairfax. He captured the general sentiment of scholars at the forum. Sulhi, who is originally from Algeria but has lived in Malaysia for over 2 decades, argued that a focus on the objectives of the Sharia would mean shifting away from formal complicity to substantive transformations. He said, 30 years ago the industry was just starting, and we let form override substance. But today the industry is in a state of refinement. A focus on maqasid would take the industry back to its intentions, on the substance, not to the form. If we can develop the framework, we will see Islamic finance is moving in the right direction. When the corporate sector is maqasidi oriented, this will be an indication that we are moving there. It would show that the Islamic finance industry would be more substance-based and prove that Islamic finance is doing the right thing. So I think a few conclusions can be reached about the debates over the Islamicity of Islamic finance. First, it is important to note that of the 4 groups of experts with whom I conducted research, only the Islamic finance professionals made comparisons between Islamic finance and halal food. So the Islamic economists, the banking regulators, the Sharia scholars, none of them ever brought this up. But the people that were actually working inside the industry brought it up all the time. This may have been due to the fact that of the 4 groups, they were the only ones who had to regularly explain Islamic finance to a public with limited knowledge of how it worked. Food was an easily interpretable means of making finance comprehensible. It also served as an already existing domain in which one dimension of modern life had been Islamicized. Previously, when food was locally produced, one did not have to worry about whether it was halal. You live in the village, everything's halal, right? Nothing would exist that wasn't halal. But industrial food has created a problem of recognition in which one could not be sure whether packaged food was compatible with Islam or not. Thus, state licensing boards could resolve dietary ambiguity through an official certification process. Islamic bankers hoped that the awareness of keeping a halal diet would carry over to the financial practices of Malaysian citizens to ensure that they lived their lives in complicity with the ethical principles of Islam. Furthermore, these experts invoked halal food to argue that although instruments used in Islamic finance appeared to be the same as instruments used in conventional finance, the context of their creation marked their difference. Thus, both a chicken and a bond could be deemed permissible through the endorsement of a religious authority endowed with the power to designate what complied with Sharia and what did not. Hamza, the CEO, took this a step further when he pointed out the limitations of this logic, stating that Islamic finance should not be content with the mere designation of permissibility, but should instead seek to achieve social and moral benefits. In conclusion, I would like to suggest that debates over the Islamicity of Islamic finance reveal how Muslims are asking themselves and each other about what denotes proper Islamic practice. Past scholars have focused on the key role of orthopraxy as a defining feature of Islamic piety. That is to say, they have asserted that proper Islamic practice is more dependent on what one does, prays 5 times a day, avoids pork and alcohol, fasts during Ramadan, and so forth, than what one believes. This contention is partly premised on the presumption that internal states are ultimately unknowable except to Allah. This perspective has enabled arguments that privilege form over substance and context over content. The recurrent reflection on authenticity in Islamic finance, evident in comparisons to halal food, revealed discontent with this formalistic approach. Indeed, efforts to ground Islamic finance in the maqasid, the purposes of the Sharia, reveal a concern that external appearances be aligned with internal intentions and states. In a different context, Webb Keane has observed, he's an anthropologist, has observed that this concern is not so much a religious question, but indeed a fundamental question of modernity. Keane has shown that among recent Christian converts on the Indonesian island of Sumba, authentic religious practice is increasingly defined through the concept of sincerity, which is the extent to which external appearances accord with internal states. And it would appear that this is precisely the explanation for repeated references to halal food in Islamic finance. Muslims are asking themselves and each other about whether Islamic finance is only a veneer superficially covering what amounts to what essentially are the established practices of conventional banking, or whether it might reach beyond form to substance. Thank you.